So you're having a hard time trading during choppy market conditions, but you don't know how to identify those conditions or know when to trade or when not to trade. Well, today what I'm going to do is I'm going to show you exactly how to identify those choppy market conditions, knowing when you should be taking trades and knowing when you should not be taking trades. Because there is such a thing as a position of cash, or when you are a day trader sitting on your hands and not taking a trade, sometimes that's the best position or the best trade that you can deploy. So with that being said, we're going to be going over SPY over the last 5 days. Today is August 26th, and I'm going to show you exactly how to identify whether the conditions are conducive for you to be trading or not. So this week, we have earning reports on NVIDIA, which is one of the biggest names in the stock market right now. One of the drivers of all things AI with their chip development and production. So good part of the reason why the market is so choppy is because of that. Also, just the inherent nature of the very volatile market we have been in. It's almost like a little bit of investor fatigue, I believe, is going on. But how do you know that? How can you identify that we're going to see price action like this? Again, we can see over the last 5 days, we are between 768 and 761. That's a $7 range on SPY over the last 5 days. That is not a lot of movement, okay? So the first thing I like to do is I'll go back on a longer time frame, and you can see here this is the 1 year, 1 day time frame. And when we look in this 1 year, 1 day time frame, there's a few things that catch my eye right off the bat, okay? Number one is right here we can see over the last 5 days, price is in between the 9 and 21 EMA, okay? So if you look back over the last year, there has not been more than maybe 1 or 2 days consecutively where price has stayed between the 9 and 21 EMA. I mean, literally, maybe 1 or 2 days. We are on day 5 staying in between this. Actually, day 7, right? And even before that, we had a gap down, over the weekend. We were within a similar range, right here. So whenever you see price stuck between the 9 and 21, that is a great sign to avoid trading during that time. The next thing I'm looking at is the overall volume down here, right? These blue volume bars. And what we see is other than a day right here, a day right here, and then 1 day right here, in the month of August, we have had 1, 2, 3, 4, 5, 6, 7, 8, 9, and most likely 10 days below this volume threshold, where throughout the year we've only had 3 days combined, okay? So that's another great indicator, is looking at the overall relative volume. And then once you are able to identify that, you go to the shorter time frame, right? And you can see, okay, we are every single day stuck between these key levels, right? At Uncommon Education Trading, what I teach is trading 4 key levels: the previous day high-low and the pre-market high-low. If you are stuck between the pre-market high and the pre-market low, the pre-market high and the pre-market low, you are in chop. Okay, this should be considered a no trade zone. This is where you're going to have very wicky price action. This is where you're going to have very difficult follow through moves. It's going to look like it's going to do one thing and then it's going to do the other. It's just a very tricky, trappy place to trade. So if you ever see price between those levels, make sure to have your red caution flag up as, hey, maybe this isn't the greatest time to trade, or these market conditions are not conducive to big moves. So what do you do in these types of market conditions? First is understanding that with these market conditions, you're going to want to be more in a scalp mindset, okay? That means you're going to be wanting to enter and exit trades quickly because you're not going to get big follow-through moves. Second is that even if you get rejections and bounces off of key levels, if there is not enough volume or not enough implied volatility, the option contracts you purchase, they're not going to move as much, okay? So that means lessening or tightening your take profit and stop loss, because the same move with volume is going to provide more of a return than the same move with a lack of volume. And then lastly, and what I would recommend is, once you can identify that you are in chop, put your hands up, head out, shut down the screens, enjoy your day, right? As day traders, we need to know when to put our foot on the gas and when to put our foot on the brakes. Think about any high level athlete or any skill set based job, right? I think of baseball. If someone is up to bat and a pitcher throws a ball that's way outside, well, you don't swing, right? And he may throw 4 balls in a row outside the strike zone and you don't swing, you're going to get on base, right? If you're playing in a poker tournament, right? World Series of Poker, and you have just bad hand after bad hand after bad hand, yeah, you can bluff, but for the most part, you're not going to play those hands, right? You're going to fold and wait for the next hand to come. It is in every aspect of professional, execution at a high level of any skill. You need to know when to, the old, phase, know when to hold them, know when to fold them. Also know when to, push and when to, try to make things happen, and when to kind of, know that, hey, now's not the time. One of the best phrases I heard when I was learning how to day trade was when the market is easy, go hard. Okay, and when the market is easy, that means we're in a trend, we have volume, it's clear what direction we're going, right? So when the market is easy, go hard. And when the market is hard, okay, so that means we're in choppy conditions, right? We're low volume, there's no trend direction. It's really difficult to know what's going on. When the market is hard, go easy, right? And what happens is most people, it's the opposite. When the market's good and we see these trends and things are happening, people will take quick wins and they'll be out and be like, yeah, I got my money. And then on weeks like this, people over trade because they have a loss or two and they think, oh, I need to get that back. Or they start losing confidence in their setups because they're trading in an environment where no setup really works, right? You just kind of have to do your best to play the bounces or the rejections that are happening within the zone, and turns what is a good profitable system into something that you throw out the window, and now you're just trying to essentially gamble with the market. So if you want to trade successfully and you want to be good at this long term, you can't think in days and weeks, you have to think in months and years. And again, if we zoom out to that 1 year, 1 day chart, we are within and between the 9 and 21 EMA, which again, we have not had more than 2 days consecutively between the 9 and 21 EMA in the last year. Okay, so understanding that we are in a very tight range here, understanding that there's earning reports happening at market close today, understanding that we have had some gigantic moves as of late, so maybe a little bit of investor fatigue, a little bit of waiting to see what happens. This is the time to go easy. This is the time to put your foot on the brakes a little bit. This is the time to, if you are going to take trades, take 1 or 2 trades, really tight stop loss. Again, the way I see it, if you can be slightly down during a phase like this, at break even, or slightly up in a phase like this, that's a huge win. You should not be expecting to just be making hand over fist in these market conditions because they are extremely difficult. So with all that being said, that's how you can best identify chop. Look on the larger time frames. On the smaller time frames, if you're between those key levels, treat that as a no trade zone. Always look at the relative volume, and remember that you want to be trading when it's really clear and easy to identify. And if you're looking at this and you're saying, I don't really know what's going to go on, that's a great time to not trade. So if you want to make sure to catch all the free game that I share here on our YouTube channel, make sure to like and subscribe to get a lot more free game coming in the coming days, weeks, and months. Make sure to follow me on TikTok at Jeremy Lieber and on Instagram at The Real Trader Jeremy. Look forward to spending some more time with you guys in these trade reviews and market analysis. And if you want more information on our copy trading programs, our automated trading programs, or working with me closely in one of my mentorship programs, reach out on any of our social media platforms, and we'd love to provide you with more information. Stay safe out there, and let's trade smart together.